able to do these types of things with your friends, and I appreciate your friendship. I appreciate your leadership. And yeah, I'm just excited to be here. Thank you guys. Just as we get started, I just want to reassure everybody that I am a happy IML subscriber, just like the rest of you guys. And there's somebody here who's not muted. We have a kind of trippy thing going on here. So let me just mute some folks. So if you could just check and make sure you're muted. Okay, perfect. So yeah, I'm a happy IML subscriber, just like the rest of you guys. And I've been trading. March was a year. And I just realized a couple of things about this harmonic scanner. And I just like share with the group, you know. So I'm not a professional trader. I don't consider myself a master trader or any of those types of things. I just really enjoy using the harmonic scanner, and I dialed a couple of things and did a couple of tweaks to bring up my my win percentages. So I'm going to share all that stuff with you, and as we always do, we go through the disclaimer: past results, past success does not guarantee future results. I certainly am not here to tell you what to do with your money. I'm not going to call trades. I am not one of those people. I have nothing against people that call trades or taking trades. It's just not what I do. And we can get into that discussion at some point in time. If you guys are curious as to why I don't take trades or call trades, I'll be happy to answer that question. But for now, we're just going to get into it. So when I sit down to trade, the very first thing I do is I go to a place called the Forex Factory, and I'm going to share my screen, and you should all see the Forex Factory come up. Now, this is contains some vital information about what's going to happen in the market. So as we enter trades, as we play pairs, we realize that these pairs are influenced by daily events. So the daily events that influence the market are listed here. So this is, it's just forexfactory.com. This is absolutely free. This is common knowledge. You don't have to pay anything for it, but you do have to be aware that these things are going on. So if you see my cursor here, if you follow way over to the right, this little filter button, if you click on this filter button, a back screen pops up and it allows you to click on these folders. Now these folders reflect the different types of news events that are happening in the level of severity. So the red folder, that's very impactful. And then we have like this orangey-ish folder that's fairly impactful. Then yellow and gray. I don't really care much for the yellow and gray. That's a little bit too noisy for me. I find that by clicking the first two folders, it's fairly good information. And I'm just now beginning to trade CHF again, the Swiss franc, and I'll explain why later. So these are the currencies that will be listed. Now we apply this filter, and now look what pops up. Today is July 3rd. So at 4:30 a.m. today, there was great British news, pound news, Great Britain, and more pound news, U.S. news, CAD news, U.S. news, and AUD news. I don't necessarily care what the news is, because quite honestly, the market is highly manipulated, and those people behind the curtain just use news announcements to move the market in the direction that they would like it to move. And I'll discuss market makers and central banks and stuff and how they impact the market. All you need to know is if you, in your trading plan, if you are not a trading the news type of person, that's an actual strategy to just trade the news. If you're not a trading the news type of person, you don't want to be in a trade in a GBP pair at these hours. You don't want to be in USD at 8:15, because they might pop off some news and a beautiful trade that you're in just might go south because of what was happening in the news. So you need to be aware of this. So what I do is I make myself, now I just make myself a mental note, but in the beginning I wrote down on a little pad. And I said, look, I'm not trading CAD, USD, Audi, I'm just not going in there, right? So that's really important to know. What's going on in the news during the times that you're trading. So let's click on over here and get to a scanner. Here we are. Let me do this. Let me move this to over there. Can everybody see that scan? Shout out somebody, because I kind of lost my little chatty thing.
Yes.
Okay, good. Thanks, Deb. You're the best. Debbie, I got to shout out to you. Debbie is like my right-hand man over here. Debbie is the kind of person that if you were going to go on safari somewhere and you needed someone to plan it all and make sure you had everything you need, Debbie's the chick you want on your side. So, Debbie, I love you. Thank you so much for all your help.
Love you too, Tommy, but that was Tanny.
Oh, Tanny. Sorry, girl.
We're kind of a tag team here for you.
I didn't know. I couldn't
That's okay.
tell.
We got you, Tommy. We got you.
You're good. You're good. Thank you, sweetheart. I appreciate you both. So, so the scanner is up, and I'm going to stretch things out a little bit and make it easier to see. So if you follow my cursor over to the left, we're going to go over some of the information that's shown way up here in the upper left.
Tommy?
Yeah?
The screen that we have, it just says Harmonic Scanner, and oops, this video does not exist.
Oh, really? How interesting is that? 1 minute. Let me do my sherry thing. Screen 2. And how's that? Do you see my scanner now?
Yes.
Yes.
Okay.
That was
Thanks,
Tanny again.
Say again?
That was Tanny again.
Tanny! You guys are just messing with me now. I love you both. So, okay. So we are on a scanner, okay? And we do see a pattern. Fantastic. Upper left-hand corner is the 1 hour chart. This just shows that we're working in candles. This little cool thing shows that we can add some indicators. And here, this identifies the broker that we're on, Trader's Way. And this is the actual pair. And this is the actual pattern. Now, I don't really waste the brain cell on what the pattern is. I don't care what the pattern is. I don't care if it's a freaking ostrich. All I know is that the pair's about to move, right? That's what the scanner does. The scanner alerts us to pairs that are coming into motion. That's how we earn our pips. If the market is flat, if there's no delta, if there's no change, there's nothing to be earned, because we basically keep the change on a move. So if there's no move, there's no change. You got me? Cool. So one of the first things we do is we come over here to this very first column. I click on Trader's Way. I used to have that as a broker, and that's just a habit I use. What you'll notice, if you go into different brokers, the numbers will be different. You know, the take profits, the entry points, and some of the values will vary between broker. Okay, so just pick one, get used to one, whichever one you feel like using, not a big deal. So I go and I check the long scans on the 1, the 4, and the daily chart, because I find them to be a bit more accurate. And you'll notice that sometimes it's the same scan on the 15-minute chart and the 1 hour, so it doesn't much matter. So,
Tommy.
Yes.
I'm sorry, I didn't catch that. Did you say the 4 hour or the 1 hour?
Yeah, if you come over here and you click and do the pull down, it's the lower pull down, and it's scanning for 1, 4, and a day. It's doing 3.
I got you.
They're all on the same, okay? And if you want to make this little white box go away, click back up here on patterns and it'll go away. All right? So what we're looking at is a scan. Now, what the hell is a scan, right? Stephen Hooley took a trading view chart and wrote this really cool algorithm. It's just a program. And what it does is it runs this algorithm in the background, and it lets you know when something's about to happen. So the first thing I do when I pull up a scan is I come on over here way to the right. See, left and right is time. Up and down is value. So we have time and value. This is basically just a chart, okay? And I want to come over here and look way to the right, and you'll see 1.68 to whatever, blah, blah, blah. That is my current price. That's going to fluctuate. Whatever the current price is, that number is going to change. So I'm just going to make this really big and exaggerated so we can see that side of the screen. Does everyone see how this number is the current price? Cool. Now, what we're noticing is there's also more information here. There's an entry price here and an entry price here. There's actually two entry prices. Tell me, what am I entering? Well, the next thing I look at is I look at where is the stop loss. Now, if we're going back to spending time with a Daisy Duncan, she's explained to us that a stop loss is just that. It's something you type into a trade to stop your loss. Because sometimes you just get it wrong. And we need that protection because in a blink of an eye, you can blow an account if you don't have a stop loss, right?
Tommy,
Yeah.
sorry to interrupt. You have a question from
Sure.
Nancy.
Hey, Nancy, what's up?
She was asking, if it's 1 hour, does it mean the trade will not be active thereafter?
That's a very good question, Nancy. All that means is each candle is worth an hour of time. Remember, left and right is time, up and down is volume. So let's zero in on a candle real quick. So this particular candle right here, if we take our eyes and we go way over to the left, you'll see O, H, L, and C. That stands for open price. That's the price that the candle opened. This is the high of the candle, the low of the candle, and where the candle closed. So as I cover my cursor on a candle, you'll see these values change. Those numbers are red because this was a red candle. The next candle was red because it's a red candle. And now we have a blue candle. All right? So this call happened when the computer saw this D. It's called a D extension. Let's just look at the whole pattern for a minute. Okay, you'll see that there's letters here, X, A, B, C, and D. That's a mathematical program. When all these things happen in time and D pops up, then the bat pattern shows up. That's the definition of a deep bat. I don't really care. I just care that a pattern popped up. So now what is it telling me to do? Well, again, I look over to the right, I see where my current price is, I see my entries, and I see my stop loss. So if this pair begins to drop into a sell, it'll hit my stop loss. I'll lose. Therefore, it's got to be a buy because my take profits are above my entry and my current price. Does that make sense to everybody? Yes, no, maybe,
Yes.
shoot up a flare.
Yes.
Carrie, I see you covering your face. You can't hide from it.
I'm actually looking. I haven't really started, not even practicing, but it does make sense to me so far. Yeah.
Good, Carrie. Well, welcome that. You just
Thank you.
puzzled to me. I just don't want to leave you behind. And shout out a question if you got it, okay?
Thank you. I appreciate that.
Anytime, dear, anytime. So what is this telling me? This is telling me that Stephen Hooley, the harmonic scanner, is calling a buy. And it gives me several opportunities to enter. So this is actually saying the harmonic scanner expects this price to go into a little bit of a sell it's going to hit this entry price, and it's going to bounce back up and go into a buy. Well, that's pretty freaking cool, right? And down here at the bottom, they have a thing called an RSI, a relative strength index. And you'll see this 14 in parentheses. And what that means is it's doing its calculations, an average, on the last 14 candles. And if you're on the 1 hour chart, it's the last 14 hours. If you're on the day chart, it's the last 14 days. If you're on the month chart, it's the last 14 months, right? So the longer you look in time, the more accurate that tends to be. So I'm getting some kind of feedback. So what happens is when we have the price down here at this lower dashed line, that's at 30. And when it's down below 30 or around 30, that means the pair is oversold. When it comes up above 70, that means the pair is overbought. So what would oversold suggest to you? That's like every Tom, Dick, and Harry's been selling it off. Right? It's a sell, I'm selling. All these people took their profit when they got in up here. See my little cursor thing? These guys got in here on a sell. They wrote it down, and now they're selling off. They're taking their profit. So that makes sense. It makes sense that this next move is this pair should be going towards a buy, because everybody and their mother sold. Now the price is low, it's a good deal. I want to buy it at a good deal. Make sense? Cool. So I don't like listening to one person. I don't like just getting one opinion. The harmonic scanner is a phenomenal tool. It's correct 7, 8 out of 10 times. I'm a little Italian guy from New York City. I don't like losing nothing. I want to win all the time. Now, in this environment, that's an absolute impossibility. We have to lose. And that's one of the reasons why when you start out, you need to be in demo. And you need to stay in demo until first you learn how to lose. Because until you learn how to lose, it's not possible to win. You have to be willing to lose in order to win. And Tommy, what the hell are you talking about? I didn't join IML to learn about the foreign exchange, to learn how to lose money. Oh, yes, you did. And that's one of the things that, as a beginning trader, when I first got started, I didn't understand. And that's why I lost a bunch of money, because I was more concerned with my relationship with money than my relationship with the chart. When you learn to read the chart, the money comes. If you're hung up about the money, you never figure out the chart. You follow me? So we're gonna touch on that some more. So yeah. So I want to get more than one voice. And I told you earlier that these charts, this chart is built off a TradingView platform. So if you come over here and you click on indicators, you can actually type in BOL and do Bollinger Bands, right? So I already have that set up, and I'm going to bring in a Bollinger Band. Now, a Bollinger Band is an additional set of tools, which gives us a different perspective on the market. It's another voice. Anybody ever watch a cop show when they're looking for the criminal and they send the beat cops out onto the street to get their paid informants? Like, yo, dude, what do you know about this robbery, the jewel heist? And the paid informants are like, oh man, you better go see Sammy. Well, the harmonic scanner is a paid informant on the foreign exchange. Yo, Tom, it's about to be a buy. Well, I got more than one paid informant. Now I go over to my harmonic scanner. Yo, what's going on? Huh. Well, here's how this works. When you see the scanner, you'll see it's a band. And what this band shows us is the average lows of the price graphed against the average highs of the price. And the red line is the median. And you'll notice whenever the price closes outside of the market, the blue is the market. It's the average of the market. Whenever it closes outside, it's going to struggle to get back in. And then it's going to go to the other extreme. And I'm going to just roll this back. It might be kind of small on your screens, but if you look back in time, you'll see that the price bounces from high to low, goes to the high, goes to the low, went to the median, goes to the low. You see this wick? Remember I mentioned market makers? This is called a stop hunt high. This is market maker activity. This is an anomaly. The market is a highly manipulated, unfair place. What we teach you is we teach you what the market makers are doing along with these trades, so you trade with them and not against them. If someone's running the show, I want to be working from their script. Make sense? So we're going to teach you that. So cool. So now, knowing that my Bollinger Bands are telling me that this price is near the low edge of the market, my D extension actually closed, or yeah, just about closed outside of the low edge. What does it got to do? It's got to come back. If it comes back, what will it be in? It will be in a buy. What does my harmonic scanner say? It's, yo, Tommy, it's a buy. So now Johnny Bollinger, who invented the Bollinger Bands, Johnny Bollinger saying, Tommy, it's going to be a buy. So what do you think Tommy's going to do? Tommy's thinking about entering a buy. I got more than one voice telling me. Because if you just click in these numbers, you're going to win 7, 8 out of 10. Well, I want to win more than that. So I want to listen to some more people. I got some more people I want to talk to. You come back over here to indicators. You click in indicators. You type in SAR, a parabolic SAR. SAR stands for stop and reverse. I like this tool so much, I use 2 of them. And I'm gonna explain you. So here, I turn on one SAR, I turn on another SAR. So whenever you have a tool, you can come over to the middle box and do format. I was instructed to change these values by a master trader because of the way I'm using this tool. Listen to me when I tell you, do not change these values unless instructed to do so by someone who's explaining. Otherwise, you're going to put yourself way out into the woods and it won't work the way it's supposed to work. So out of the box, this value is 0.02, 0.02. I change those to 0.03. I go to style, I make that yellow, I punch it all the way up over here, and I put it here in size. This regulates the size of the little cross. And I say, okay, my red guy is formatted at 0606. I make it red, and I make it bigger than the yellow one. And the reason why I make it bigger than the yellow one, because there's some points in time where they're actually in the same place at the same time. And if you make them the same size, they block each other out. So if you make the yellow one smaller, you see the little yellow one surrounded by the red one. Okay? Cool beans. So, what does stop and reverse mean to you? Well, it means that the pair is going to stop and it's going to reverse into the other direction. Isn't that helpful to know? Right? So if you look at this pair, when the SARs are on top of the candles, it means the pair is in a sell. When the SARs are on the bottom of the candle, it means the pair is in a buy. So this is a super, super call on the scanner because look what's going on. Let me make this bigger, and I'm going to explain to you exactly how I use this puppy. Okay? Now we're going to go back in time and pretend that these candles don't exist, and we're going to come into the D extension. Here's my call, all right? Now if you entered here, in this case, you're winning, no problem. Life is good. Life is good right now. What I'm giving you is for the times I'm so freaking cautious. This is for the times when life isn't so good, right? So when this D extension happened and the call was made, look at the SARs. I have my red SAR and my yellow SAR telling me it's still a sell. So I have two of my indicators telling me it's a sell, and I have two of my indicators telling me it's a buy. What do you think I'm going to do? Nothing. I'm not doing anything. And what I'm about to tell you is going to save you a lot of money. Write it down. I promise you, you're not going to be upset that you write this down. Never enter a trade because you feel like you're going to miss it. Never enter a trade because you feel like you're going to miss it. We do not trade with emotion. We have a written trading plan. We have indicators that we use. And when every single one of our indicators shows up to the party, that's when we pull the trigger. Because when we trade in a very methodical, structured way, we remove variables from our trading strategy. The market is already full of variables. We don't want to add more variables by varying our trading plan. When you're trading this particular strategy on this harmonic scanner, it requires all four tools, all four indicators to be in sync before you pull the trigger. So, here's the call. Tommy's not getting in. Next candle, Tommy's not getting in. Next candle, Tommy's still not getting in. Now, what did the market makers do? Here's exactly what the market makers did. They ran up three candles. Your typical novice trader is like, oh man, I'm missing the move. I better get in. Let me get in before I miss the move. Boom. You go in for a buy, and then they drop the market away from you. And you hit your stop loss for 10 pips. And now they got your money again. So this is why it's important to understand the proper use of a stop loss. Because when you use it properly, it saves your butt time and time again. Improperly, it just bounces you out of trades all the time. Okay? So we're going to go over this a little bit. Don't worry. So now, this is where Tommy gets in right here. Because I have my yellow SAR and my red SAR. Remember I told you sometimes they're going to line up one on top of the other? See how you can still see them? Because one's bigger than the other. Can you guys see that? Now, Tommy's getting in right here. I'm going to tell you something. Greed kills. Greed kills. You don't want to be greedy in the market. I used to say, oh man, the scan is calling out 127 pips. So let me put in a buy for 125 pips. And I would get sucked up in the reversal every freaking time and lose my shirt, right? So what Tommy does is Tommy goes in for 5 freaking pips. 5. 1, 2, 3, 4, 5. And let's see what would happen. I'm going to take my little, everyone know about this little ruler, this little measuring guy? You click on the measuring guy. This is where I'm getting in, right here. Boom. And now where are we? On this wick, that's, well, here, right here. Let me measure it this way. That's 9.8 pips. It's almost 10 pips right here. I made all my money right here on this one candle. And you know where I am? I'm out. I took those 5 pips and I ran like a thief, like I stole them. You know why? Because they're in my account now. I have them. I own them. The only time your money is at risk is when your money is live in the market. So if I have my money in my pocket, who can take it? Nobody. So let me explain another thing about trading and beginning. This is an actual industry statistic. In the retail trading world, 90% of all, not some, not most, all, 90% of all retail traders will lose 90% of their account in the first 90 days. Fact. Fact. Another reason why I just take 5 pips. Have you ever met someone, have you ever heard of anybody going broke consistently taking a profit? Is it possible to go broke if you consistently take a profit? It's mathematically impossible. So if you're winning 7, 8, 9 times out of 10, and you're constantly picking and taking a profit, you have to be ahead. Here's the catch. Tommy, what's the catch to this strategy? I'm going to explain to you exactly what the catch is. Because when you're starting, even if you're in demo, you're trading in micro lots. You should be trading in micro lots. That's 0.01. Nobody gets excited about taking a nickel. I made a nickel on my first trade, man. Let me go pay the rent. Tommy, I'm paying $200 a month to learn how to get a nickel. What are you talking about, man? Here's the thing. The skill that you develop consistently earning those freaking nickels in micro lots, what happens when you go to minis? Now those nickels, that's 50 cents. Not impressed? Cool. What happens when you go to standard lots? That's $10 a pop. What happens when you're trading in lot sizes of 100? Who loves me now? Get out of your head that you're trading for dollars. Get out of your head that you're trading for pennies. You're building your account to trade in lot sizes of 1,000. When you trade in lot sizes of 1,000, each pip is $10,000. How do you like my 5 pips now? How would you like to stay in the market on a 15-minute candle and pull 50 grand? Do you want this to be another freaking job? Do you want to like stare at these charts for hours and hours and not put in a stop loss and have your stomach all twisted up in knots and, oh, the market's moving this way, I'm down $900. No. Let the Harmonic scanner show you the move. Add some additional tools, pull out 5 pips, but do it 100 times in a row. It's not uncommon to win 30, 40, 50 times in a row. Why? You're only taking 5 pips. How confident are you going to be about scraping together 5 grand and throwing it in the market when you consistently are winning 98 out of 100 trades? Tell me. And then you're trading in lot sizes of 20, $200 a pip. That's $1,000 a trade. Now, if you went in, let's just do some fun with numbers. Someone's got a calculator over there. Tanny, Debbie, real quick. Let's just say we trade at 20, lot sizes of 20, So that's $200 a pip, and you do one trade a day, right? So what's this, $1,000 a day, right? And
Are you doing 5 pips?
yeah, 5 pips,
Yeah.
right? So it's $1,000 a day.
Mhm.
And let's just say you trade 5 days a week. Well, say 4 days a week for 40 weeks. Would you run the math on that?
So we're doing 4,000 times 40. We're talking about $160,000.
Okay, so it's
I'm not-
160 grand working 1 or 2 candles a day for like 4 days a week. Do you want to get married to these charts, or you want to be in and out, simple, surgical strike, boom, get your 5 pips, and go kiss the dog? You feel me?
I can do that.
This is what I'm talking about. Because I was the guy who was in front of these charts for 60 hours a week, man. I paid the price. This is how I figured this crazy stuff out. Because I went and I made money real quick. And then the money I made, I lost real quick. Because I didn't know what I didn't know. I thought I was a trader. I went through the academy 4 or 5 times. All I was doing was talking about a Daisy Duncan. My wife was sick and tired of hearing about his Daisy Duncan. She thought I was cheating on her. Who's this a Daisy Duncan chick? How come you're spending so much time with her? Right? But that woman, I owe her a lot because she taught me the freaking basics. She taught me what's up, how to speak the language. That's what IML is going to teach you, how to be conversant with the language. If you went to freaking China and you didn't have an interpreter, you'd be lost. Welcome to IML. Welcome to the foreign exchange. You should be lost. Nobody taught us this, right? So after I had my scalp handed to me, I went into demo for 6 freaking months solid, straight, 6 months. Making trades, winning, losing, winning, losing, winning, losing. Why? Because I was doing strategies all over the place. I was following this guy. I was following that guy. I learned real quick not to take anybody else's trades. And here's why. It's a very, very simple explanation. Has anybody here ever played catch with a little child growing up, softball, football, baseball, basketball? You threw the ball to someone, somebody caught it. Has everybody at least done that once in their life? You know what I'm talking about?
Yep.
Right. Well, how good does that work if you have your eyes closed? Can you catch the ball if your eyes are closed? No. That ball,
So we could
I
come.
want you to picture that ball,
Might not be
that's pips. The ball are the pips,
started. So I told.
right? You cannot catch someone else's trade because you don't see what they see. You don't understand where they're entering, where they're exiting, what broker they have, what their strategy is. Are they on a 1-hour chart what they're looking at? Are they looking to scalp? You can't see the ball. And that's why you drop it. That's why, personally, the majority of the money I lost was from taking other people's trades.
Yeah.
I'm not saying, look, I'm not telling you what to do with your money. I'm telling you what happened to me. And I came to IML to become a trader, not to follow a trader. I want to be the guy. I don't want to have to depend on the guy or the gal, right? What if I'm taking trades from a super trader and I got a 7-8 figure account and this person gets hit by a pie wagon, or this person makes so much money they move to freaking Alaska and start, doing dog sleds? What skill do I have? Zippo, nada, nothing, zero. Now, I'm talking to you like this only because I treat you guys like my family, and I have a group. So I deal with many people, and this is what my group comes to me with. And I find that the people in my group that struggle the most are people who are taking other people's trades, and here's why they take them. They take them because they think that these people are better than them at trading. And you know what? They're right. They are better at them than trading. But you know what also they have to consider? They have the same freaking tools that those people have. They just exposed to the tools later along the timeline. Right? If you can't expect to trade like someone who's been trading for 5 years. They see different things. Okay? So give yourself a freaking break. Get off your own back. Don't be your own worst enemy. And give yourself 3, 6, 9, 12 months to learn this stuff. Somebody in this group has got a college education. You guys went to college, right? I'm so freaking dyslexic, I barely made it out of high school. Couldn't go to college. I don't learn that way. I learn tactily with my hands, right? So it's not that I'm stupid, I just learn a different way. So if you give yourself some slack, identify a strategy, stick to the freaking strategy for more than 38 seconds until you freaking master it in demo. Yeah, if I say demo a couple more times, it's because you should be in demo. Unless you have a written trading plan, unless the demo account that you started with has been doubled or tripled, don't even think about putting real money at risk. Because the lessons you learn in demo are going to be applied to real money. And when you do start trading real money, you start in micro lots, 0.01. I have a dear friend of mine on my team. It's like a brother to me. I know him for 15 years. I'm not mentioning any names. He's been struggling for a year because he spent all his time with real money. He wouldn't slow his butt down. He wouldn't do demo. He finally got the message. He went to that training that Aurea did over on the beach when they brought in GJ. The lights went off. The angels came down from heaven. He finally got the freaking message. Went into demo for weeks and weeks and weeks. And now he's trading in micro lots and he's winning like 9 out of 10. I don't know why it is that way. But I'm telling you, that's the way it is. Okay? So let's go back and do some more charts. Sometimes I slip onto my soapbox. I don't mean to, but it's because people are asking me, Tommy, what about the chart? What about the chart? What about the chart? The answer isn't in the chart. Everyone here is 6 inches away from being a master trader. You're 6 inches away from being a master trader, a 9-figure account. It's this 6 inches right here in between your ears. You straighten out that 6 inches and you're on the road. You got to get this mental side right, because I can teach a chimpanzee how to follow the bouncing ball on this chart. Not hard. When this lights up, scratch your butt. Whatever. When I have these 4 indicators, do this. Then do this. It's the same thing over and over again. It's always the same thing. And leave emotion out of it. Don't trade with money you can't afford to lose. When I put money in my trading account, I pretend like I'm driving on 995 with my top down in my car, and I just take Benjamin Franklin and I toss it into the air. And that money, in my mind, is gone.
That's right.
It is gone. It's not the rent money. It's not my food money. It's not, my kid's birthday money. His birthday's not for 6 months. I'll make it back by none of that stuff, man. It's money that I can afford to lose. And the money that I did lose in the market, I put that into my educational account. So in my mind, that money's not lost, because every time I lost money, I learned a lesson. Every time I lost money, I learned a lesson. And I write that stuff down. And the longer you trade, the more lessons you learn. And when you look at the charts long enough, you're going to come up with a strategy that works great for you. See, we all have different risk tolerances. We all have a different threshold for pain. We all have a different relationship with money. And that's the killer. It's the relationship with money that holds new traders back the most. So when you can begin to divide and separate those emotional things from just what the chart says, man, then you're on your way. Then you're absolutely on your way. So I'm going to see if anyone's got some questions on all the stuff I've been saying. And if not, we're going to go and do another pair. So anybody?
Yeah, I have several questions regarding to the entry. So I don't know if it might be better for after you finish with
No.
the next.
Shout it out, man. What do you got, Daniel?
Okay, so I'm back to the strategy demo here for and
Daniel, I can't
I'm
understand what you're
trying.
saying, man. You got some kind of funky thing going on with your microphone. So.
Your
Can you
reception.
hear me when I speak this close?
Try to move away from the mic a little bit.
Better. Better from here.
No, why don't you just type it in the chat and then Debbie can read it.
Good plan, Danny.
Okay, how about now, guys?
Oh, better.
Okay, I just logged on my phone and I got out of my computer. So that works. Okay, great. So yeah, I'm trying to get more familiar with like the entries. When is a good time? I know you look at the harmonic scanner on the hourly or 4 hourly to look at a pair. Then from there you look at the 15-minute. Is that right?
No. Okay. You don't have to leave the scanner. Okay. So this strategy is super, super basic. Don't have to have a high skill set. You just have to do the same thing over and over again. So let me start with a new pair and go from soup to nuts. Step 1, step 2, step 3, step 4. Cool?
Yeah,
So,
that's cool.
Right. So what you do is when you bring in all these indicators and you save them as default, you come over here, there's a little box over here and you click it, and it's like you can name your chart layout. So I call this Tommy Harmonic. And then I click it, and it brings up my same indicators over and over and over again. So you don't have to keep on rebuilding the chart over and over. You follow me?
Yeah, I'm following you.
Okay, good.
Tommy, do that again. Where was that located?
Yeah, if you come over way up at the top, see where it says Tommy Harmonic?
Got it. Okay.
You
It's covered
click
up on the
on-
chat.
Click on that pull down, and then it'll allow you to save whatever your current chart is. It'll allow you to name it and save it. So every time you sign on to the harmonic scanner, you don't have to rebuild your tools. Just pull down your saved platform, and you're good to go.
Nice. I didn't even know that.
Yeah,
Awesome.
yeah. That says that's a huge time saver, right? So I'm going to come over to my brokers. Whatever broker you pick, it doesn't much matter for our exercise or even for trading. Even if you have a different broker in your account, just get in the habit of picking the same broker. We want to remove as many variables as possible, right? So I happen to pick Trader's Way. No rhyme or reason. I used to have that trader as my broker. Not a big deal. They're not better or worse than anybody. That's just the one I use. So I click on that. I come to the pull down, click on that, and I prefer to look at the 1 hour, 4 hour, and daily. Now, the newest scans will be at the top. The older scans will be down towards the bottom. So, Euro NZD. So this is the same chart I have up. So I'm just going to pick Audi NZD because it's a different chart and it's a different pattern. This was a sharp. So I click that puppy, and you can see that things have already happened. And this is great. We could do some analysis here and show you how these tools are beneficial. So the first thing I do, now if you can, I know this is difficult to do because the chart's already built, but bear with me if you can, and just ignore these candles that absolutely exist. Let's go back and, let's do this. See if I can do that. Ha! Let's go back to here. And let's say we're at this point in time where this scan is being called. This play is happening. So what I do is the first thing I identify is if it's a buy or if it's a sell. And in order for me to do that, I need to know where my current price is relative to my entry prices and my stop loss. So my current price right now is here. And if you look, I'm just going to spread this out so you can see this wick on the D extension. This wick actually came up and made my entry. So if you type this into the numbers, you are in this trade. And if this trade goes up into a buy, are you going to take profit or are you going to hit the stop? Anybody, shout it out.
The stop.
Right. So that means this has got to be a sell because my take profits are below my entry prices. So I am now in a sell. So I look at my harmonic scanner and my harmonic scanner is calling out a sell. Well, okay, fine. Let me see what Johnny Bollinger is saying. Here are my Bollinger Bands. Here is the high edge, the high average of the market. I have candles that close outside of the average high, outside the high edge of the market. What is the market going to want to do? In which direction does the market have to travel in order to get back towards the average? Is it going to continue to go up or is it going to come down?
Down.
Down.
Right. Is that in sync with the scan? Is that in agreement with the scan? Are they agreeing?
Yep.
I have two voices that are telling me it's a sell. Two voices are telling me it's a sell. Now, what about my SARs? I have a fast-acting SAR. My red SAR always flips first. If you look back here, when my SARs are in a buy, SAR, buy, oh. Well, this is unusual. For whatever reason, my yellow SAR flipped first, so it made me a liar. So I have both of my SARs below my price, and what does that tell me?
Buy.
So how many indicators do I have telling me it's a sell? How many indicators do I have telling me it's a sell?
So far you got the harmonic scanner and the Bollinger Band, so just two. I haven't checked the RSI.
No, don't worry about the RSI. How many indicators do we have saying it's a buy?
Both the SARs.
So I have twos telling me it's a sell and twos telling me it's a buy. I want you to come with me on a little mental trip. We're going to go to the beach. And we're going to go and we're going to play tug of war on the beach. And we're going to draw a line in the sand, and we're going to have a rope with a knot tied in it, and the knot is right over that line. And then if I pull the rope in one direction, it's a buy. If I pull the rope in the other direction, it's a sell. Can you picture that? When the rope moves in one direction, it's a buy. When the rope moves in the other direction, it's a sell. Now, who's my team? My team is the indicators. I got two indicators on the buy side of the rope. I got two indicators on the sell side of the rope. What happens when I get in? What happens when we start pulling the rope? It doesn't move.
You don't do anything until they're four in sync.
Perfect. That's the perfect answer. So now let us move over to the next candle. I ain't doing anything. Why? Because I still got these candles over here telling me buy. But what does a novice trader see? A novice trader sees, oh man, this thing got in. I'm going to miss it. Let me jump in. Ain't missing nothing. Now, boom. They flipped. Get my little ruler guy. Right here they flip. Here's my ruler. This is where the price went from this candle to this candle. And look at the wick. So I got in here, and this thing went down 12 pips. Did I get my 5?
Yep.
Did I put my money at risk for more than one freaking candle?
Nope.
No.
When I'm trading in lot sizes of 1,000, can I go about my day and do whatever the hell I want now after spending an hour in the market and making 5 grand? So this is where the disconnect comes in. It's not exciting to make 57 cents on this move because you have like Lindor who's grabbing 1,200 pips, and you got this one who's got a $7 million account. Don't compare yourself to those guys. Stop it. Just stop it. That's destructive. That's mental suicide. Get good at getting in there, sneaking in, grabbing 5 pips, build the account to where Jonathan Lindor's marking up charts. I got nothing, Stephenson Lindor, I have nothing against him. I love the guy. I met him many times. He's a really great guy from New York. He's a Goomba, right? Nice guy. But he spends more time marking up charts than I do trading. Let the harmonic scanner do the work. Jump in, get the hell out. So now, what happened to this move? What about the guys who came in and got in here and came almost back here? Now they're flat. Now because of their spread, they're in the red again. They're riding the red bus. Now they're out there kicking the dog. I had $300. Now I'm down 10. And you do that emotional roller coaster to yourselves and beat yourselves up, right? I'm already out. I'm out. Now, here's the other dynamic that you have to understand. When you're only taking 5 pips, you can't afford to pay 4 to the broker, right? So what the market makers do, another indication that the pair is about to move is when you watch the spread goes up. The spread, does everyone understand what the spread is? You've been through the academy? The spread is like if you're taking the loan from my cousins, it's the VIG. It's what you got to pay. It's like, it's the price you got to pay to play. In order for them to take your trade, you got to give them a couple of pips. Most of the time, it's 1, 0.5, 0.9. But when they're about to move the market, it can go up to 3.5. And it goes up to 3.5. See where my cursor is? Right here is where the spread is going to be high. And as the trade goes down, by the time I get in, the spread is 0.5, 0.9. Who's keeping all that? Me. Patience pays. You're not ever going to miss the move because the market's always moving. You're just getting in at a different time. Okay? Cool beans? Anybody else? Daniel, that was a phenomenal question. Thank you.
No, thank you, Tommy. So in this case, do you hop on, okay, you look at the indicators on the hour chart, and once all 4 indicators line up, that's when you'll decide to jump in off that hour chart there?
Yeah, if you want to do more scalpish stuff, identify your pair on the 4-hour, the long chart, and then go and see if it's available in the 15. So let me see if this will click over. No, let me do it this way. Let me come over here. Where are we? This is AN, so 15-minute chart. Yeah, see, it's not even on the 15-minute chart. Okay. So another thing you could do is if you don't want to sit in front of this thing for 3 freaking candles and you're here, let's see. Okay, so you look at the chart and this is the scan. This is what we know. We only know this amount. But what we do know is take profit 1 is here and take profit 2 is here. So what you could do is you can enter a trade instead of market execution. You can enter a trade as a sell stop. A sell stop. That means stop the market, I want to get in. So as the price drops, stop the market, I want to get in here for 5 pips. So there's been times when I'll look at this here at the D extension. I'm not going to sit in front of my screen, so I'll come down here halfway between entry and take profit 1, somewhere like halfway-ish, because when I'm there by halfway-ish, I'm secure in the trade, and I'll put in this case, a sell stop. If it was a buy, I would put in a buy stop, and I just put it in for 5 pips. If it never gets there, the trade doesn't click off. Make sense? And if I do that, I put in whatever stop loss they have here, I use that stop loss. Does that make sense?
Yeah, that makes sense. But in that case, then you're not using the indicator, all the indicators, is that right?
In that case, I'm typically not using the SARs. See, I did that before I discovered SARs, and it worked okay. But the way I trade right now, and I'm not telling anybody to go out and get TradingView, I use the TradingView platform. It's just a more elegant set of tools, very versatile. I'll take the trade off the harmonic scanner, and I'll just write it over to my TradingView chart. Okay, let me show you that real quick. Hold on. Let me share. Let me share. Una minute. Screen. Does everybody see my chart now? Yes, no?
Yeah, I can see it.
Yes.
Okay,
Yeah.
cool. So this is a TradingView chart. This is my actual chart that I trade from. I trade on a black screen. It's just easier on my eyeballs, right? And here's my Bollinger Bands. So what I can do, let me see. This is AN, right? So I'll come over here, upper left-hand corner, and I'll type in AUDNZD. That's actually one of the most difficult things for me to do, is type the letters in the right direction. Just being honest with you. I spend most of my time trading the Japanese yen because it's only got 3 decimal places, and it's easier for me. So full disclosure, right? All right, so here and now, this chart that we're looking at, let me come back over here. I think it was on the 1 hour chart. So here's the 1 hour. This is actually the scan that I was just looking at. GBP, I lost that. AUD, NZD. I'm catching up to you guys. Just give me a second. Right. So what I could do is now I can come over here to my little line tools, and I can put my horizontal line in for my stop loss. My stop loss. Oh, this is a different pair. I lost the scanner. It's giving. I'm going back from screen to screen. Just give me a second. AN.
Hey, Tommy, in the meantime, can I ask another question about the news related?
About the what related?
In regards to the news, because I've been using your strategy on demo, and
Yeah.
I've done 22 trades so far, but I'm still trying to get used to.
Wait a minute. What do you mean you've done 22 trades?
That I've jumped in 22 trades using your strategy.
Okay. And what's your win rate?
Is right now 14.22, so I know it could get a lot better than that.
No, man, you're above 50%. Okay, so talk to me. What's your question?
So one of them is in regards to the news, how far away, like it actually matters. So in other words, there was one morning I woke up at 6 a.m. to do the trades, and there was news that affected it. It was a red folder, I think, at 5:30 a.m. And then there was like another one at 8:30 a.m. So I was like right in between. And I'm just curious, like how far away the news would be where it no longer affects it.
Yeah, good question. Good question. See, it actually is dependent upon how quickly the market's moving, which session you're on. If you're on the London Exchange or the New York-London overlap, when it moves relatively quickly, you might be able to get 5 pips out in like 1 or 2 15-minute candles, right? And
right.
You could be out way before the news happens. If you find yourself you're in a trade when the news is about to happen, just make sure you have an appropriate stop loss, whatever that's appropriate for you. Make sure that stop loss is in place if it should go south on you, and just chalk it up as a loss. And just go, and this is another reason why I as a rule of thumb, I was just setting my stop loss at 10 pips, because it only takes 2 wins to get rid of the loss. All right, so does that answer your question, Daniel?
Yeah, that does. And then I guess the next question I had was in regards to the indicators. You know, I was using the 15-minute as entry points. So I'd wait for the SARS and the Bollinger to line up on the 15-minute. I'd first make sure it was a harmonic scanner currency that called either for that buy or sell, and then I'd wait for the indicators on the 15-minute to line up. And then sometimes I would hop in the 5 minutes, like as soon as the SARS flip on the 5-minute. And that one so far doesn't seem to be as effective. So I was wondering, like, what time frame you normally go with that you found to be the most like successful?
I usually enter off the 15-minute chart. You know, the 1, the 3, the 5, they're just like a little too noisy. You know, they just move really erratic. By the time, see, these candles are a point in history. When the candle is drawn, it already happened. It's not telling you what's about to happen. It has already happened. So you're looking to make a move in the future on something that happened in the past, and there's a disconnect. And you can't react quickly enough on a 5-minute, 3-minute, or 1 minute. There's a time delay. So it's when you learn how to scalp on a 15-minute chart, then you go to a 1 hour or a 4 hour, it's like taking candy from a baby, because the candles are moving so slow. You see a flat top or a flat bottom, and you know what to do, and you got a whole hour for it to happen. So I'll just place my trade and go away and go do something else. I don't even look at it. You follow what I mean?
Yeah, I'm following you.
Okay, cool. So so everyone's looking at my trading view chart, and I'm having a difficult time finding that scan, so I'm just going to show you what I'm talking about. I can come over here and do drawing tools, and I could write like what my stop loss is. If, let's say this is calling out a sell, I'll actually put in the stop loss here, and then I'll come and I'll say that's take profit 1, and this is take profit 2. So basically, I just draw the harmonic scanner chart on this tool, because for me, this tool is a whole lot easier to use, and I could bring in other indicators that we haven't discussed, but this is my point. My point is, if this was calling out a sell right now, I'm waiting for my SARS to flip into the buy, and then I would go in. So that is that. Screen 2.
And just a quick question on that too, Tommy. Do you jump in as soon as they flip, or do you kind of wait a while after?
Okay, that's a good question. See, let me go back here for real quick to answer that. Let me show you a really, really cool feature. Okay, do you see this clock? 1634, 1633. You see
Yep.
that? I'm on the 1 hour chart. So let's go to the 15-minute chart. And now look, this is 1 minute and 23 seconds left on this candle. Okay? So this is my candle countdown clock. So I'm going to show you something now. There are things called flat tops and flat bottoms. Flat tops and flat bottoms. This is going to be a flat top, and then we're going to have another flat bottom. So we are now in an area of what? We are in the Tokyo channel. This is consolidation. And this is where Mr. GJ makes all his money. So if you want to learn how to trade consolidation, go follow GJ. The guy's a freaking genius. Because the market spends most of its time in consolidation, and he just sits there and pulls out 5 pips like all freaking day long. But anyway, when you see this countdown clock on the 15-minute candle, what happens is when this countdown clock is at 7 minutes and 30 seconds, that's the halftime report on a 15-minute candle. That's the half a candle. You follow me?
Yep.
Cool. So now, not at 7 minutes and 35 seconds or 7 minutes and 29 seconds. It's 7 minutes and 30 freaking seconds. You want to see where the price is relative to the last candle. At the halftime report, if the price is in the lower half of the candle, it will typically go down. If the price at the halftime report is in the upper half of the candle, it will typically go up. So let's come down to the 5-minute chart and make them real big. And you'll see on the 5-minute chart, it's looking like this buy is about to reverse. My SAR is going to touch this red candle. It'll flip over. I'm sorry. Yeah, the buy is going to flip over to a sell. The other thing that candles do is candles usually, see how this thing retracted? When it goes over, it typically retracts or goes in the opposite direction for a pip or so. And they pulse between 5 and 7 times. They're going to pulse. They're going to move between 5 and 7 times before they go and do what they do. All right? So now we're at 3 minutes and 33 seconds. So at the 2.5 minute mark, if this price is in the lower half of this candle, I'm predicting that the next candle is going down. Let's just see what happens. It's like watching paint dry right now. You see how that candle is pulsing?
Yep.
All right, at 2:30. $33, $32, $31, $30. It's in the lower half. Not by much, but it's in the lower half. So I'm predicting that the next candle is going to be lower. It could wick lower, whatever, but the next candle should jump over and be lower than this point right here. Should come over here and go and come back. And let's just see. In a minute. So now if it doesn't, what will it form? If it doesn't come back down, what will it form? What is this about to form right now?
Flat bottom.
Correct. So if we keep the flat bottom, where is it going to go?
It will go up on the next one.
Right. And where are we? Look at this. There's our Mr. GJ channel. And it is 6 pips. So this isn't an area that you want to play in because of the spread.
And now, Tommy, do you ever happen consolidation in the case where the range is much higher, like a 10 pip or 15 pip range in consolidation?
Yeah, that happens. I'm not a consolidation trader.
Gotcha.
So the real person to answer that is Mr. GJ, because he has parameters. The channel has to be so wide before the time you can get in, the trade gets clicked in, so you're not moving, you know, outside of where you'll get your pips because you still have a spread. Okay, so now this did not follow the rule. This was in the lower part of this candle and it still went up. You know what? It freaking happens. So this is going to give us a flat bottom. So in the case of the rule of the flat bottom, this next candle should go up. And it's going to come up to here to this resistance line and go back down. Anybody else have other questions? On time? How are we on time?
I got one last one here, Tommy. Do you use the RSI as an indicator as well, or is that kind of like a bonus?
For me, that's a bonus.
Okay.
That's like it's a nice to know, because when you put in the Bollinger Band, that actually sets the high and the low edge, and it tells you where it is.
Right.
So without having a Bollinger Band on there, you need the RSI. But being that I bring the Bollinger Band in, the RSI is just a nice to have. So guys, that's pretty much all I got for tonight, unless you guys have any further questions. I'm good with you. I'll turn it back over to our fearless leader.
Hey, Tommy, can I just say something really quick
Sure.
before you turn it over to Aurea? You know, there's some of us who do this every day. We teach, you know, we're students, but this particular session brought so much value to me. Not only with you teaching the harmonic scanner, but everything that you were saying in coaching everyone that's here about becoming an independent trader, about learning who you're listening to, how they're trading, you know, and using this academy so they can learn, and there is no rush, you know. So I got a lot of value on that. I love the way you said it. I love the passion that you spoke, you know, and I just, you know, I want to thank you for that. I want to thank you for your time.
Well, Tanya, you know we love you. We've loved you for years. We consider you a dear friend, and anytime I can do anything to help, you know I'm right there for you. So thank you very much for those kind words. I really appreciate you.
Okay.
Thank you, Tommy.
Thank you, Tommy.
You're welcome. You're welcome, guys.
Before we go, I'd like to, before I thank you, Tommy, there's someone really special on the webinar that their birthday is like in an hour, and I just wanted to wish Danny a very happy birthday and to let him know that
you.
I love you. And
Happy
Oh,
birthday.
happy birthday, good guy.
Happy birthday.
and we wish you thousands among thousands of pips this year.
Yes. You can take us out.
Your way.
Eric and Joshua, thank you so much for joining us from Kenya. We'll see you guys next week. Everybody else, thank you guys.
Happy birthday. Happy
for
birthday.
Wednesday night with us. I won't
Thank you, guys.
be next Wednesday, but Tanny will be hosting it.
Woo-hoo.
I am traveling overseas
For 5 weeks.
for 5 weeks. I'm going to.
We're gonna miss you.
Safe travels, my dear.
Safe
So
travels.
next week,
Mazel
same
tov.
time, same place. It's going to be with Tanny and Tommy T, and of course Debbie. Thank you so much for navigating in the chat every Wednesday night. I appreciate you guys and have an amazing, amazing rest of your night. Good night, everybody.
Thank
Good
you.
night.
Safe travels.
Thank you, everybody. Thank you all, you
Safe
guys.
travels, Oria. Happy birthday,
Safe
Danny.
travels.